as well. Sonia?
So the theme this morning on the upside is mid-cap IT. All mid-cap IT stocks are doing well, right? Whether it's Persistent Systems, whether it is Coforge, L&T Tech, and KPIT Tech as well. And these are stocks which have already gained about 20% this year. KPIT Tech is up 20%. So it brings me back to that article which our team put out, about the kind of outperformance that IT has seen after a decade of decadal slowdown that we saw last year.
No, absolutely. I mean, IT, mid-cap IT especially, I think did well on Friday, did well yesterday, and I think that kind of continues. The move continues this morning. Vinit Sambre is joining us now. He's the market master of the day, head of equities at DSP Investment Managers. Vinit, great to have you with us here. Thank you very much for your time. I think last we spoke was bang in the middle of the earnings season. Now we've had some time to look back at the earnings season and hear management commentaries, etc. How's the view shaping up, Vinit, in terms of the underlying demand conditions and what it means for markets from here? Go on.
Yeah, hi. So I think clearly, when we look at the earnings, I think the earnings season has just got over. And looking at the commentaries of the management, it is quite clear that, the consumption has been a bit sluggish at the moment. And what most companies are sort of facing is, heightened cost across the board. So while companies have done well as far as the overall sales growth might have concerned, but when we look at the profitability margins, there is a impact on the profitability, which means that and this is across most segments, excluding the banking sector as such. So I think as far as we are concerned, this is leading to some bit of downgrades in the earnings for the current year. But also, one has to remember that this creates a low base as far as the earnings are concerned for largely consumption as a category, let's say. And also, if we believe in the mean reversion theory, and as the world goes through a bit of recession, these commodities which are hurting the profitability should cool off a bit, and that should then again lead to expansion. So maybe 2 quarters we will have some pain, continuing. But after that, we should see the profitability improve, and that should, lead again for the upgrade as such to start maybe 2 quarters down the line.
Are you raising your allocation to IT now, both large cap and mid cap, Vinit? I mean, we've seen a decent amount of pullback from the lows. Your thoughts here?
So IT, I've been sort of maintaining that the long-term view continues to remain positive for the sector, given the fact that Indian companies are pretty competent, and a lot of the change which is taking place in terms of the digital shift and in terms of the cloud-based shift. I think those we are playing an important role. But I think what we are sort of dealing with is how the recession itself is going to shape out, and depending upon the news flows which are coming out from the developed market, I think the IT sector is taking the clues from there. The current environment seems to be suggesting that the recession itself may not be so deep, and it will not cause a big sort of pain, and which is why we've seen this short rally in the IT sector, especially the mid caps, where the promise of higher growth is slightly visible there. So for us, I think the overall outlook remains positive, and depending upon the valuations, we would be open to look at companies at a price point at a level of comfort. We would be open to look at a few of the names out here.
Hi Vinit, good morning. I recall that in October you had taken this contra call. You said that IT stocks, some of the valuations have looked far better in comparison to what they were, and that's why you'd be looking to buy them on dips. Similar is the case with Pharma. The problem is Pharma hasn't really bounced, and as of now, it's not on anyone's radar. It's lost its mojo, so to say. What's your view on it? When things are looking so gloomy, do you believe at some point of time some of these stocks will start looking up? Because the disappointments that we saw in the past quarter from Pharma names itself was quite large. Go ahead.
So in fact, I believe that this year and maybe for the next 2 years, the pharmaceutical companies are likely to outperform the most of the other sectors. And I think the simple logic out here is these companies have seen earnings getting impacted because of the higher cost. The growth itself in their international markets have been slow. So I would say that again there is a low base creation which has happened in the sector. And if you look at the other fundamental metrics, which is the cash flow generation, ROEs have got impacted, but I think they're still decent, upwards of 14-15% for most companies. Valuations have also come off. So I would 100% agree with you that this is a good time to have a contra view on the pharmaceutical sector, because the demand is almost non-discretionary in nature. So when the demand actually comes back and we'll have some benefit of the raw material prices cooling off, there could be a bigger change as far as the earnings are concerned. And I'm sensing that this will likely take place over the next 1 year or so. So I think with that in mind, having a slightly longish horizon for the sector, one can definitely look at incrementally, allocating capital to the sector.
Okay. All right. That's on the pharma sector. So, you spoke about IT, you spoke about pharma. One space that has been hit quite hard over the last many months is consumption. And now the feeling is that, spending power will get compromised further as rates are moving higher, and globally as well. Perhaps we're heading into a recession. There are layoffs across sectors. Do you think that could hit consumption and FMCG in a big way? And if yes, would you cut back on your allocation there?
So, we are actually looking at some of the data which helps the overall consumption demand. And we looked at the 9 months results for the corporate India, and we looked at the wage growth. So I think the wage growth for the 9 month has been 17%, which is a very robust number as such. And the other data point which we are also monitoring is the rural wage growth, which is also inching up. Beyond that, I think we have the MSPs for the agri products being pretty reasonable in the current year. So I think all of this actually gives us some good feeling that at least on the income front, things are not looking as bad. And it is matter of time the demand should sort of come back, because I think the overall consumption story in India is a long-term story, and that we are very strong believers in. Now, because of the higher interest rate inflation, I think people maybe just, they might have pulled back in terms of their spend habits, might have also changed a bit, but those will sort of normalize and come back. We have seen within consumer discretionary, auto has seen a smart recovery as such. So I think wherever, people are willing to spend, they are spending, and it is some places where they have cut back on spending, which I would imagine should sort of come back maybe with a delay of 1 or 2 quarters. So I think there will be pain for 1 or 2 quarters, but we are not taking a view to cut back on our consumption consumption story stocks. But in fact, we are looking to add into this the next 1 or 2 quarters of slow growth environment where the valuations are actually becoming reasonable for few names.
Okay. All right, Vinit, thanks so much for stopping by and giving us your quick take on the markets as well as individual stocks that we discussed. Look forward to having a chat with you rather soon. But let's focus on the cement space. Stocks have been gaining in trade in the last couple of days or so. Reports indicate that some companies have gone ahead and increased prices by around 5 to around 15 rupees all across the country. Mr. Rajneesh Kapoor, the COO of JK Cement, joins us on the show. Hi, Mr. Kapoor. Thanks so much for joining in. Well, you predominantly operate in North. Some